Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video is what the failure of Trump's health plan means for the market, plus updates and a few stocks to watch. This is for the week of March 27th, 2017. So in case you missed the news, the health plan that was proposed by President Trump was not passed this past week. He did not get the support he needed to push it through. There's a whole bunch of different articles on it. I'll link you to some in this video at the bottom. But this is a possible first crack in the ice for the Trump administration. And look, I don't want to be Chicken Little and run around and say, oh no, that's it, it's over. But definitely have to call it like I see it here. And the fact that Trump did not get the support to get this health plan initiative through definitely leaves his other policies up in the air as well, including tax breaks, including infrastructure spending. And look, let's not kid ourselves. A lot of this rally is based on what the participants in the capital markets feel Trump can get accomplished. Okay, and that's what you hear when you talk about the Trump rally. Okay, when you hear the Trump rally talked about, rather. Oh, you know, his promises are coming through. He's going to be good for business. He's going to cut taxes. He's going to get rid of Obamacare. And look, I don't think, like I said, it's time to run around and go, that's it, he's a complete failure. I mean, that's just ridiculous. I read this one extremely biased article saying that's it for Trump, he should be impeached. I have no idea what one thing has to do with another. Look, the initiative didn't get passed, okay? There's definitely question whether he has full support from his party. Apparently he doesn't. And will he be able to sway that? Now, if you've been reading Twitter, or I don't know if you follow his Twitter feed, but if you read the billion news sites that update on his Twitter feed and talk about it, you see he was pretty harsh to those that didn't support him. So the question is, what does this mean for the market? Now, if you've been watching my videos, you know that I have been looking for a pullback for a while. And when this started to take place, I said this could be the complex type of pullback that I had been looking for. All right, we had a little bit of a complex pullback here in December. Wasn't that big of a deal, though. It definitely wasn't a deep pullback. Then we had a pause before it, pause before that, quick pause before that. And then this is the most complex we've seen since the election. All right, now we're at the 50-day moving average. We do have a spinning top. So that does tell us that this could be it, right? We went a little bit past the A wave equaling the C wave if you're looking at symmetrical targets. A little bit past, but that's okay. I never expect anything to land on the button. And we're at the 50-day, which is a key watch moving average. So do we get the bounce from here? Well, I think it's silly to just say, yeah, no, that's it. All right, well, we'll just get past this and move on. But I also think it's silly to ever count the bulls out, especially in this ripping bull market. And yeah, we've pulled back a little bit, but the trend is still intact. We haven't hit it. I mean, yeah, we hit a lower low here, but this is all in a corrective state here, all right, a corrective state off of the impulsive or motive move up. All right, so I'm not going to start to worry, and I'm putting that in air quotes like you can see me do that, until we're below the 200-day moving average. Even if we get through the 50-day moving average, that may just lead to more chop. Now, you know I've been talking about a complex correction setting up, and this could be just the start of that. Okay, this could be 1, 2, 3, right? So this could be 3 down. Maybe it's going to come up a little bit to put a wave 4 in and then go to wave 5, and that could be A. Then we could get a zigzag up in B and then further downside in C. And that's if I'm even counting it right. This could still be part of wave 3. We may not get wave 4 here. Okay, so let me do a little Elliott wave. And I got some good emails on this that said, you know, you're selling yourself short, no pun intended. You're a better Elliott wave theorist than you think. No, I'm not. I'm pretty bad with this stuff. So let me just talk about what I could potentially be seeing here. So 1 down, zigzag up in 2, and then maybe you have, from here you have 1, 2, 3, 4, maybe a little bit more down, 5 to do 3, then an ABC up in 4, then the 5th wave down, and that could be the A wave. Then from that, we zigzag up. We don't go to new highs. That could be the B wave, and then another 5 waves down in C. Not saying we start a bear market. Not saying we start a huge correction. All right now it's a pullback, but it could get more complex. It could get into a complex correction rather than just a simple, oh, look at this, zigzag, and then we go higher. Okay, that's what I think is going to happen. I think that it's not going to be as easy as just, Trump's good for business, buy. I think now that there was some resistance seen with the healthcare initiative, now I think that some market participants may start to be concerned that, hey, you know what? Maybe it's not going to be all smooth sailing, and he's just going to push the tax cuts right through and the infrastructure spending right through. And the market hates uncertainty. Hates uncertainty. Okay? So just pay attention to that. Could we get the pivot off of here and the rally? Yeah, we could. The best thing to do, in my opinion, is to watch this little mini coil here and see if Thursday's high is taken out, and of course it sticks. Then maybe we could be on our way, but we really have to get back this ugly candle from Tuesday. Okay, we really have to get back that whole tall red candle for me to think, okay, we're just going to go right back to the highs. Again, I don't think we're in a bear market here. I don't even think the entire bull market move is over just yet. Just think we could get a little bit more complex. All right, so let's talk about some stocks that could have been affected by the healthcare initiative and that may now see a little bit of maybe some relief or could benefit from Obamacare sticking around at least for the short term here. So you got HCA Holdings, symbol is HCA, and it is a medical care facility stock. Okay, so you can see here it broke out, had a really nice day on Friday. This looks like it could be going back to the highs. Let's go into the industry list for here. Let's just go through this list. It's 35 stocks. I hope you don't mind. I'll try to get through them here quick. You got Community Health Systems, got to really break $10. You got Tenant. And we got to watch that 50-day moving average. Let me just go through a bunch of them and see. Let's see what we got here that may be looking for potential opportunity here. Okay, oh, no, that's the actually industry. All right, let me keep going here. Okay, so missed this one. You got this Tivity Healthcare. Okay, or Tivity Health Inc. I apologize. And where are you? Boy, I need my tool here. A lot of, okay, there you go. Okay, you got your trend line. Let's see what this has to do here. It has to break and see if it could go. See if it could run to $30. Okay, what else we got? Now these are buyouts. All right, so here's stock that we may want to watch. And this is AMN Health Services. Okay, so this got a nice slap down from 44, and this was before they canceled the vote. But watch this one. This is a pretty sharp move down. See if it holds the 200-day. May be worth a little bounce play there. But if not, and it just flags up, then watch for it to go through the 200-day, and it may be a short. Anything else? Let's see what we got here. Okay, got that. Okay, and this ADPT is just murdered, so let's avoid that. All right, so and the second group, also in healthcare, all right, are the healthcare plans. So here's United Health Group, and we talked about this a couple of weeks ago. It broke out, faked it, came back, and then it went. Watch the 50-day moving average and see if that's going to hold. Again, we're going to open up the industry, the healthcare plans, So now you want to watch this Centene Corp. This stock had a pivot off of the 200-day moving average. It's still in a bigger picture consolidation, but this is this is a bad line here. Okay, I got to draw this line over, but you could connect those two lines and you could see. So, I mean, looks like around the 72 area. So this may decide to fill out and coil a little bit. Then you got this Molina Healthcare. Now, both of these, okay, Centene and Molina, both benefit from Obamacare sticking around because they are Medicare and Medicaid dependent. You can see this Molina had a nice pivot off of here. Now, again, this is a downtrend, and I don't like just picking bottoms. So the best thing to do here is watch for follow-through or watch for a consolidation, then pivot off of that consolidation for an entry, okay? Like you can see here on the downside, it gapped down, then it consolidated, and then it continued. Well, watch for something similar, maybe without the gap, for a consolidation here and then continuation. All right, you got this CNXR, you got Magellan, all right, you got CVS, you got Express Scripts. Because of the margins, they're getting squeezed. Universal getting bought. There's UNH we already talked about. Here's Aetna. Watch the 50-day moving average there as well. Okay, Humana, also with the 50-day. That had a nice bounce. Okay, I mean, it still had a down day, 1.25%, but it had a nice bounce off the lows. Okay, here's Anthem. Watch the 50-day. Here's Cigna got cracked, 2.25%. See if it can hold in here. All right, so a couple of stocks to watch this week. I think that you should focus on healthcare on the short term if you're looking to either establish swing trades or if you're looking for day trade opportunities in case the volatility continues. And of course, they're muted volatility. Okay, it's not like a low-priced, low-float stock that gets juiced up 400% intraday. It's not going to happen. More than likely, not going to happen with the healthcare stocks. But doesn't mean they can't be on your watch list. All right, so let's go through the rest of the indexes. Here's the Dow. Watch the 50-day moving average coming up there. NASDAQ still holding up relatively well. I don't like this pattern here. It's not really a flag because you don't have the impulse down, but you do have potential coil here. Sorry, I just got to get my drawing tool better here. So you got a potential coil here that if this breaks to the downside should see the 50-day moving average. The Russell, hanging out back here, back to home base here. See if this holds here. If it breaks through, gets down to the 200-day moving average there. And then the mid caps, okay, similar. Semiconductors, still acting okay. I mean, had the test of high here, did close below the open, but a lot of these stocks don't look terrible. I mean, I don't like this. I'm not looking to enter off of that candle on the long side. I mean, it poked up to the new high, what we call a 2B top, and then it closed below the open. May make a nice shorting opportunity if there's weakness in the semiconductors. Watch the lows from Friday and see if we can get down to the 20 EMA. These are tough to trade because they're strong. They're tough to trade on the short side, because they've been so strong. Intel is trying to stick around its 200-day moving average. This could be another shorting opportunity if this fails here. NVIDIA, so NVIDIA popped up out of the coil we highlighted. Then it's in another coil here. Again, it's over the moving averages, so I guess you got to lean to the upside, but the coil puts it in a state of decision. So let's see, and it's not that far above these moving averages. Could easily go back below them. It's like an ADI or an MU. Wow, nice pop on MDU with the big reversal there. You gotta watch this, okay? Because this could get a gap fill here. So watch this one here. It's not a huge volatile stock, but definitely something to pay attention to. Biotechs. All right, you got like a Gilead. It's still in a downtrend. Biogen is more sideways than anything. All right. So not really seeing any advantage to those. Look at some of these stocks. Like Caterpillar is messy. John Deere hanging out right here at the 50-day moving average. Again, is it a short if it breaks it? Pretty strong stock. So, I mean, for intraday opportunity, stuff like a Klatenka or John Deere, sure, there's opportunity there. I don't know if this is going to be the greatest short sale swing entry ever or just something for a trade if it breaks the lows. But I'm trying to cover both ends because I know we have a lot of intraday traders that watch the video. So in case you're one of them, you want to get your list together for both intraday and for both swing trade positions. And if, look, you don't short at all, well, at least if you're long these stocks, perhaps you decide, you know what, let me lock in some gains by moving my stop loss, taking partial profits, whatever it is. All right, let's look at some of the big tech names. You got Amazon. Don't see an entry there. Apple. I mean, look, it's strong. I don't see a short here, but I also don't see a fresh long entry. Here's Alphabet. Yeah, Alphabet got cracked here. So watch this to see if it goes back to its home base and hangs out down there in its range, previous range. Here's Netflix just hanging in its range as well. How about gold? So gold, which was looking like it was going to come back and test these lows, has now pushed its way up. Still, you got to use the 200-day moving average as a cap. As long as that 200-day moving average is there, you can't really be super bullish on gold. Oil, still think oil has lower prices to be seen. Here's the USO. Should be able to get down to this 9 area. And then what about bonds? Okay, so bonds, which broke out, if I could speak, that would be great. Okay, which broke out to the downside, now came back up inside its range. Let's see if it could break out to the upside here. If it can, watch the 200-day moving average. So let's do some updates real quick, and then I will go through a recap of what I spoke about. So let's do some recapping here. All right, so Caesar Star. Remember we talked about this one a few weeks ago. It dipped out, but then it broke. Tough to say this was an easy one to get in on Friday because it gapped above it. Didn't really give opportunity to get in unless you're trading an intraday. So that one you could wait for another consolidation on. Here is Ultra Clean continuing to move higher. This one we started talking about 2 weeks ago. There's a nice one here. Here is Arista. It's continuing to move higher. This is nice. All these are, hey, move your flipping stops up, okay? Here's a Ralph Lauren. So a little fake out to the downside. Came back. Wouldn't have stopped out if you took the short because it didn't come out the other side. But it's got to go sooner rather than later. Otherwise, you may want to consider getting out of that one. Here's Universal Display. Got to really redraw these lines here. So you got to do something like this, something like this, something like this, and now watch for something better to set up. Here's A10, not doing anything. Hasbro, okay. I mean, not acting terrible. I don't like this lower high here, but if it winds up forming another coil, then that could be a nice one too. LJPC, I mean, already popped La Jolla Pharmaceuticals and came back down, so this probably would have been a break even at a minimum if you would have held through and didn't take any profits there. PLC with Children's Place, it went out the other side before it came out the upside. Again, it's a little too sloppy. NSIT, this is a fake out, so it broke and then it came back down. So this one, if you would have gotten in, you would have stopped out on the way down. That kind of sucks. And then you got WageWorks, which was a nice one, came up, tagged the high, and then boom, gave it right back up. But again, right, hit the first target, so there's opportunity to either take profits or at least move stops to protect yourself. All right, so that's really it for the updates. Gave you some healthcare stocks. One other stock that I'm looking at is this Activity Brands, who we talked about a few weeks ago. It did break out to the upside, got a nice move, but now it looks like it's headed for failure. If it takes out the low of this doji here at 199.65, I'm looking for this to go to at least down to test this low down at 193 and change, And then below that, you got this low down here, all right, at 169.42. Okay, so watch this activity, brands, if you do wind up shorting, because I know a lot of my followers don't short. A lot of people don't short at all. They just like to go long. But if you do short, this could be one that could be setting up. This is a head and shoulders, but usually they set up at highs like here. So, I mean, I guess it's technically a head and shoulders, but I don't really put a lot of faith in them when they're setting up in the middle of a down move here. They're not really continuation patterns. All right, so let's recap. The market has come to a point where it could pivot and try to get a bounce. I think if it does get a bounce here, I do not think we go to new highs from here. I continue to believe that we are going to go into a more complex corrective-like pattern here. I think the healthcare initiative not getting the support it needed is not a chicken little run around the sky is falling sign. However, I don't think it's good, and I think that people will start to question whether President Trump is going to get the support that he needs to push his other initiatives through. Remember, nobody wants to fight with the president, okay, the whole time, and the market hates uncertainty. So the Trump rally was, hey, he won, he promised he's going to do all this stuff. Hey, he's doing the stuff he's promised, but then when it came down to getting stuff through Congress, the real big thing, now there's a problem. So again, if the tax breaks go through without a hitch, if the infrastructure spending, okay, then this could change. I'm not talking about a hitch like unanimous or anything like that, but if they can get through, then perhaps the confidence can be restored. But as of right now, I don't even think it's a yellow flag, but I think it's definitely something to pay attention to. Do not think the bear market has started. Don't even think this huge uptrend has been broken. Now, of course, that could change quickly. To me, I'll start with Thursday's high getting taken out, perhaps as a sign that we're clawing back up. But until we get last Tuesday's high, this big red candle taken out, I'm not looking for us to just go right back to highs here. Okay, I think we're in for a more corrective type of move that could take several months to set up. All right, that's it. Any questions? Tiny@attackthemarkets.com. Apologies for the long video, but had a lot to say, so I said it. Any questions, like I said, just send me an email. Have a great week, and I'll talk to you soon.